I'd like to start by thanking Dr. Garg for his very kind invitation. I am absolutely delighted to be here in Delhi. I will preface my talk by saying I'm pretty sure he invited me here to be a little controversial. And so I will make a few controversial comments in this conference, particularly after the first 10 speeches we had this morning. So I'd like to build on some of the themes that Mr. D and Mr. Tanaka outlined this morning. I would like to discuss the global disruption of energy markets that is absolutely underway, because ultimately the question, so Mr. Singh, I totally agree with your comment about India should dramatically reduce imports of coal. India should dramatically focus on using all of its natural domestic resources. So I agree with probably 90% of what you said. And to some degree, it's a question of the time frame. So there is a clear disruption. It is technology driven, it is finance driven, and my background is 30 years in finance. I was managing director of the biggest bank in the world 10, 15 years ago. It got disrupted, just like the energy market is going to be disrupted. India, I will also acknowledge, and the reason why I'm here today, the reason why I spend all of my time focused on India, is that India is already a world leader in renewable energy. Let me just give you one data point. India has the largest solar project in the world at Buckley, 2,050 megawatts. It's the biggest plant in the world. It's bigger than anything China's built. And so there are opportunities that are emerging from this disruption, and India is embracing those, and I applaud its efforts. So I put that out there very clearly. I am very pro what India is doing, and I also totally understand the common but differentiated responsibilities that the West caused the mess, the West should take the lead, the West should finance it, but the reality is they're not, and I totally acknowledge that. And so I accept, therefore, it's about India looking after its key priorities. But where I would challenge the Chair's introduction, it's about the top priority for India is he said poverty alleviation is the top priority. I would say there are actually two top priorities of equal priority, and that is energy security and poverty alleviation. And if you reframe the discussion, energy security is all about using your domestic resources. And so India imports I think we heard this morning, 87% of its oil, 20% of its thermal coal, 50% of its coking coal, 50% or more of its gas. India has an enormous fossil fuel import bill, and so to me, energy security is all about addressing the domestic resources that India is blessed with in order to reduce the fossil fuel import bill, and that is, if it's not addressed, is a major headwind to sustainable economic growth in India. Before I do that, to me there is also an absolute new paradigm emerging. I think we've heard that from most of the speakers already today, and I totally agree. And I also think it's a lot easier to address that paradigm when you also include, as our earlier speakers talked about, generational change. And so I think that is important when we look at the and gender balance as well in terms of the lineup of the speakers, very much including myself, male and older generation. We need to realise technology, youth and gender are key changes. So I think there are it's important for India to understand that there are opportunities from an inevitable global technology and finance-driven change. So it's not that India has to chart the same path as anyone else. India will chart its own path. India needs to leverage its own domestic resources. But when I look at India's resources that the country is blessed with, it is coal, it is wind, it is solar, it is hydro. You are blessed with 4 domestic resources. Why would you be importing coal when you've got domestic coal, but why would you also not be leveraging all of the 4 domestic resources that the country is blessed with? So with those framing references, I might just make a couple of references to a few slides. I won't kill you by slide, death by slide, but one just to be very controversial. I did put it up here. I actually disagree, Chair, with your comment about that slide about being offensive. I have a different view. To me, the question of stigmatisation of coal, it's actually trying to load the argument. At the end of the day, I come from a financial market background. Financial markets are the ultimate in pragmatism. They're not ideology driven. And so I just put this up to be deliberately provocative, but Peabody has long announced itself to be the world's biggest private coal company. Coal India is the world's largest coal company. Peabody always claims it's the largest private coal company. Just in 1 year, it's worth looking at how much of its shares have gone down, and the answer is diabolical. 80% shareholder wealth destruction in just 1 year in what is a pretty strong bull market. So I'm trying to reference financial markets aren't ideologically driven. They are ultimately pragmatic. And the financial markets are telling you something fundamentally is changing. This disruption won't be going on for 30 years. It probably won't be going on for 20 years. So I think India needs to plan out for 2 decades to use coal very clearly, domestic coal, for the next 2 decades, but at the same time embrace all of the opportunities that are coming from technology. Now, again, this is a global perspective. It's not a reference to India, but you need to have the context when you're setting your strategic energy plans that some of the largest coal mining companies in the world have either already exited or are trying to exit thermal coal. And here I'll very differentiate between coking coal, which is absolutely needed for steel production. It's needed in India, it's needed in China, it's needed in the West. This is a thermal coal comment. Rio has exited coal entirely. South 32 has exited thermal coal. BHP is exiting thermal coal. Anglo has announced they're exiting thermal coal. The Japanese trading houses, other than Sumitomo, have exited thermal coal. So you want to put it in an Indian context, but please bear in mind the global context. And again, to emphasise my finance background, the most successful utility in the world is Next Era Energy. The largest utility in the world is Next Era Energy. The best performing utility in the last 15 years in the world, according to the stock market, is Next Era Energy. Next Era Energy was up 50% in just the last 12 months. I follow everything Next Era Energy talks about very, very closely. All of their transcripts, all of their investor presentations are available online. I would suggest you reference them. Next Era's chairman talks about the end of coal, thermal coal, in America by 2030. Now, this is a man who is in charge of a company with 120 billion market cap. He is the largest investor in infrastructure in America today. He invested $11 billion just last year in energy infrastructure. So this isn't an environmental group, this is your ultimate capitalism. And what he is saying in every speech is that near-firm wind and solar, once you remove America's subsidies, and America subsidises renewables very, very extensively, he says put that aside. By 2023, they will be gone. By 2023, it is absolutely clear wind and solar, firmed with storage, are the low-cost solution. They will knock out coal entirely by 2030. They'll knock out nuclear by 2040. And then they will erode gas, even though America has the lowest gas price in the world. So again, think of the source. The source is the CEO of the most successful utility in the world. This isn't an environmentalist speaking, this is economics and finance speaking. Now, the numbers also show that the world is moving away from coal-fired power plants. So This is final investment decisions using IEA data, and you can see that something fundamentally changed in 2015, and we've seen a 60–70% reduction in new investment in coal-fired power plants, according to the IEA. Southeast Asia is regularly cited as the next bastion of growth for coal, and yet you'll see something fundamentally changed on the IEA data last year. Same trend, maybe 1 or 2 years lagging, not decades lagging, 1 or 2 years. The IEA constantly is upgrading their forecasts, so you'll see distributed solar, as your Prime Minister has targeted, has to play a key role for India's energy security and for India's energy future. The IEA says there is going to be 300 gigawatts of distributed energy installed globally by 2024. These are new installs, not including the existing base. Your country is pursuing offshore wind. That's probably a decade away from being commercially viable. And that's where coal, I certainly agree, for the next decade will play an absolutely base, fundamental role in India. I'm not going to go through all of these, but deflation is ultimately why technology is changing and why the financial markets are moving. So, thank you. One of the key requirements, there's absolutely no doubt, wind and solar are intermittent, categorically. Every energy source has issues, positives and negatives, but bear in mind, storage is very, very rapidly becoming competitive. It's probably 2, 3, 4 years away from being really commercially viable. But when people talk about deflation, I talk about deflation in every presentation. The price of lithium ion dropped 50% in the last 2 years. Let me suggest the cost of batteries is dropping 20% per annum. So what is too expensive today, by 2023, as NextEra says, will be entirely commercially viable with no subsidies. Every month we're seeing new global records set. I won't go through these, but all of them, prices below $20 a megawatt hour. Last month we saw Marubeni of Japan leading with Total a world record low for solar in Qatar, $15.7 a megawatt hour. So Marubeni used to be the biggest builder of coal-fired power plants in the world outside of China and India. It has now pivoted and has said it will no longer build new coal-fired power plants. That is a commercial decision by the CEO. Europe is moving because of regulations and carbon pricing. Everything changes when you have a carbon price of 25 euros. Germany, and to talk about speed of change, we know Germany has absolutely gold-plated their transformation. It's been far, far more expensive than it will be for India. But when you think about rate of change, this number on the bottom left, Germany saw coal production drop 26% last year alone. It's probably the 5th biggest country in the world, and coal consumption, which has been the bedrock of its economy for decades, dropped 26%. This isn't going to take 3 decades. We heard how America used to produce 1 billion tonnes a year. They used to forecast that they were going to 1.5 billion. It's an interesting parallel because India forecasts its production is going to go to 1.5 billion. But what's actually happened is production has dropped by almost 50%. So they got the percent right, they got the direction 100% wrong. Australia is a minnow globally, but I put this in, it's my home country. I put this in just to highlight one key point, and a number of the speakers have referenced the importance of energy efficiency. So in Australia, we've had a decade of 2.7, 2.8% GDP growth for a decade. This is the change in electricity production over a decade in my country. We've had one of the strongest growth rates of the developed world, and yet electricity demand is down on a decade ago. That is energy efficiency. Prime Minister Modi has made energy efficiency an absolute core to the Paris Agreement commitment that India made, and India is making huge strides there. So it's critically important to decouple economic growth from energy consumption. But you will also see that Australia is probably the 6th biggest producer of coal in the world, and yet we've closed half of our coal fleet in a decade. Half. Entirely replaced by renewables. Now, again, just to maybe wrap up, financial markets are absolutely moving. So you probably have heard BlackRock made, to me, what is an absolute pivotal announcement. They acknowledge that they have to work within the Paris Agreement for the first time last month. They acknowledged oil and gas will be a key part of the global economic system for decades to come, but with immediate effect, BlackRock announced it's divesting its coal assets. Now, BlackRock is the biggest investor in fossil fuels in the world. So when the biggest investor in the world with $7 trillion of assets says we're divesting thermal coal with immediate effect, I don't think you've got decades to wait. In fact, there are 126 globally significant financial institutions with formal thermal coal exclusion policies. There have been 6 announcements in the last 2 weeks, and in fact 2 last night. So a Finnish company, Ilmarinen, and RBS of the UK. RBS of the UK announced they will be removing all fossil fuel financing from their loan book. But it's not one company, it's 126 globally significant banks. Now, again, I would differentiate. India absolutely has every right and every need to use its domestic coal for the next 1 to 2 decades. That's critical. I am not in any way suggesting otherwise, but what I'm suggesting is financial markets move, deflation is driving a massive technology change. India has actually embraced this change already. You've seen coal-fired power plant developments drop by 80% 3 years ago. So India is leading the world in this area. India is leading the world in renewable energy. So don't get me wrong, I study India because it's a leader in the world. It's not doing it because of the Paris Agreement, it's doing it because of economics and energy security. And I'll finish on one final slide. I talk about the importance of financial market and capital flows. This is a rather interesting change, and Adani Green is the biggest developer of renewables in India, and the financial markets have shot the share price up 600%. Total, one of the biggest fossil fuel companies in the world, just invested $500 million in Indian renewables alongside Adani. Adani Green has also raised over $1 billion in global green bonds and global debt markets in the last 6 months. So India needs capital. I think your then Energy Minister, Piyush Goyal, 4 years ago went around the world asking for governments in the West to fund India's transformation, and he came back with almost no support, token from France and Germany. The financial markets will now provide all the capital India needs with the policy that India has, with the low-cost nature that India has in wind and solar, and Adani has set its sights to be the biggest renewable energy player in the world by the end of this decade. Bring it on. Thank you.
Thank you, Mr. Buckley.
Investing its coal assets. Now, BlackRock is the biggest investor in fossil fuels in the world. So when the biggest investor in the world with $7 trillion of assets says we're divesting thermal coal with immediate effect, I don't think you've got decades to wait. In fact, there are 126 globally significant financial institutions with formal thermal coal exclusion policies. There have been 6 announcements in the last 2 weeks, and in fact 2 last night. So a Finnish company, Ilmarinen, and RBS of the UK. RBS of the UK announced they will be removing all fossil fuel financing from their loan book. But it's not one company, it's 126 globally significant banks. Now, again, I would differentiate. India absolutely has every right and every need to use its domestic coal for the next 1 to 2 decades. That's critical. I am not in any way suggesting otherwise, but what I'm suggesting is financial markets move, deflation is driving a massive technology change. India has actually embraced this change already. You've seen coal-fired power plant developments drop by 80% 3 years ago. So India is leading the world in this area. India is leading the world in renewable energy. So don't get me wrong, I study India because it's a leader in the world. It's not doing it because of the Paris Agreement, it's doing it because of economics and energy security. And I'll finish on one final slide. I talk about the importance of financial market and capital flows. This is a rather interesting change, and Adani Green is the biggest developer of renewables in India, and the financial markets have shot the share price up 600%. Total, one of the biggest fossil fuel companies in the world, just invested $500 million in Indian renewables alongside Adani. Adani Green has also raised over $1 billion in global green bonds and global debt markets in the last 6 months. So India needs capital. I think your then Energy Minister, Piyush Goyal, 4 years ago went around the world asking for governments in the West to fund India's transformation, and he came back with almost no support, token from France and Germany. The financial markets will now provide all the capital India needs with the policy that India has, with the low-cost nature that India has in wind and solar, and Adani has set its sights to be the biggest renewable energy player in the world by the end of this decade. Bring it on. Thank you.